Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Whether you're watching this on YouTube or listening on audio, please be sure to subscribe. I have several upcoming great guests that you definitely do not want to miss out on. And speaking of great guests, today with me is Life with Dividends. So why don't you go ahead and give yourself a brief introduction?
Thank you, Dave. Firstly, thank you so much for having this. Is a great podcast. I happen to look at some of the older guests and their discussions, and I hope that I can keep. Let's see how this goes.
Okay, yeah, thank you
Um,
so much. That's a great compliment.
sure. As far as my background, I hail from in the United States. I'm in my late 30s as an engineer on the software side, primarily in the semi. Been investing since about, I would say, mid. Started off as an index fund investor, and kind of, was you educate myself as to how do you pick individual big
Right.
learning curve as far as mostly thought that investing is not for the gambling. If you don't know what you're doing, you could lose a lot of money.
Right.
That hump, and around
Yeah, there's definitely
about
always the
2020,
risk.
yes, that's right. Around about 2020 is when I really started getting investing, and it seemed like dividend growth investing boxes as far as my outlook as an investor.
Right.
And
Yeah, yeah, yeah.
so I kind of started off with dividend growth investing as a good starting point, entry point into the stock market. Ever since then, I've been blogging and been on Twitter soon after, and documenting my journey as an investor.
Yeah, it's great on Twitter. Obviously, you see everybody at different points in their journey. Some people, making thousands of dollars a month in dividends, and others making hundreds, or even somebody starting out making less than $10 a month. But everybody knows sort of that, that very well known saying on Twitter, brick by brick, you're just building slowly. And obviously, those accounts that tweet that they've made five, six, $7,000 in a month. Those are obviously very inspirational accounts to follow as well.
Yes, I mean it's been very motivational to kind of see how as far as their own personal investing journey.
Yeah,
I kind of
definitely.
related, right? Especially in the kind of market that we have right now, where you
Right.
kind of, I guess, use this as a motivation for yourself to kind of keep at it and just stick to your
Yep.
strategy.
Yes. Yes. Um, very good. Very good points with what the market is doing up and down, but the dividends just keep coming, whether the market is up, down, sideways, doesn't matter, right? So, I think for me and a lot of other people, that's probably the most attractive part of dividend investing is the fact that the dividends just keep coming every month or every quarter, no matter what the market is doing.
Yes,
Okay,
you hit the nail right on the.
yeah, thank you. Yeah, yeah. Um, yeah, let's get into talking about some of the different sectors. For those that have watched or listened to some of the previous podcasts, sort of know I just sort of go through a few different sectors and we discuss them. And I tend to start with REITs. Personally, I am a big fan of REITs. It's a nice way to have exposure into real estate without the headache of being a landlord. So, and being in the US, I'm sure either you own O, or I'm sure it's on your watch list. I see that come up on Twitter all the time. So, I guess let's start there. Any thoughts on O Realty?
Well, in terms of um, what you said, really, as far as REITs and the attractiveness as an investment. In my portfolio, I primarily look at four REITs, O being one of them, realty income, where they call the monthly dividend company, their investor relations. It's just, it's a dreamland for any dividend of
Right.
our community. It's just fantastic. It's a, if as the ideal dividend growth stock, realty can be, numbered in that list, at least in the top 10 for sure. I do own realty income, and it's nice that they do play, although the frequency of when the dividend actually hit isn't really that critical to me,
Right.
but I do like the flexibility and consistency with with the dividend pay. So yeah, I own O, and uh, we are in REITs in general are struggling as far as, but REITs in particular are seeing a lot of red. So great for anybody. Well, before I get there, I just want to say this is not in lab. Please do your due diligence
Yes, definitely. We're not
before you own
financial advisors. We're
anything.
just having a chat here about different stocks and how attractive some of those dividends can be in those stocks. But yeah, to your point, do your own research.
Right. So other income, I own three other REITs. One, Digital Realty Trust, which is maybe you guys or you don't know about it. This is a play on the data where they supply real estates for the largest software companies.
Oh
Um,
wow.
they're a big player, and so I kind of wanted to get a piece of that pie.
Yep.
Um, uh, the other two REITs are Stack Industrial, kind of a small player, but they own and real estates corresponding to that. And a lesser known stock called Care Trust, which is kind of in the same area as Omega Healthcare, which is a name. Uh, they are involved with skilled nursing facilities,
Right.
um, and so the demography of of the population. I kind of wanted to a piece of that pie as well, especially considering the median age. Uh, um, your baby boomers, uh, they will need health in their
Yes,
life,
definitely.
and it, it goes. It's a cyclical business, obviously. With
Yeah.
recessions and
So I have a couple points to add to your comments. Um, one
absolutely go ahead.
being one being the digital, the second one you mentioned, which uh, sounds like it should be right up your alley. If you're a software engineer and then that's something you're familiar with, so it definitely makes sense for you to be involved in something that you know. So that's kind of my first point on your one comment. My other point, you had made sort of obviously the entire market has been beat up a little bit this past week or month or couple months. So it's just a great time to dollar cost average down on a lot of your entry points. And obviously that's what I've been doing. Everything that I'm up on, I haven't been buying because I'm like, well, I'm just going to buy the stuff I'm down on and dollar cost average into getting more dividends, right?
Yeah, absolutely, completely agree with both the points, and that's kind of a larger point that I want listeners in that you have your own or your circle of competence with
Right.
respect to your day job. You can leverage to, I guess, build positions that you're familiar with, right? You don't
Go with what you know.
necessarily need go with. So yes, and I guess dividend kind of a unique species, if you will, because you kind of have to have the courage to average down, DCA,
Yeah,
average down, and it's harder to do if you're looking at just the ticker. But
right.
if you look at the yield, it kind of in the right track as to how you should do investing when the stock price is low or at a
Yeah, I couldn't agree
52-week
more.
low.
I couldn't agree more. Moving on to the next sector, energy. I don't know if you saw one of my first tweets this morning. I woke up to some nice dividends rolling in, so that's a great way to start a Saturday morning. Wake up, make your Saturday morning coffee, and see, oh wow, there's some more dividends and some more money in my account that wasn't there yesterday. And one of those was Algonquin Power, one of my favorite energy stocks. Any energy stocks that you own or have on your watch list or have any interest
So
in?
yeah, yeah, I do own Exxon Mobil, of these big oil
Yep,
majors, and they during the pandemic time, which made it an ideal entry point, open and build up an entry position. I rat, from the investing community in general. Big oil is bad. You know, it's it's
yeah.
not
From
good
the environmentalist, big oil is bad. From the investing point of view, it's like, well, if I can make money, I'm going to make money, right?
exactly, exactly. And so that's yet another point that I want to have to separate out these these concerns, if you will, when you're, I guess, a generic consumer. You different prism, because
It's removing
as
emotions, right?
you have to be objective, and you
Hmm.
kind of have to an opportunity. And honestly, big oil, that invest time for me, with oil being at all-time highs. So yeah, so but to your point, Exxon Mobil, given the market that we are in, I'm not into other energy companies, Shell, and maybe even Chevron on my watch list. Be
Right.
buying energy stocks at this time.
Well, and being in Texas, you're right in the heart of big oil country too, right?
And most of the oil refineries are down here by this Gulf, and
Hmm.
so you kind of have a pulse, if you will, as to the businesses, and that kind of you get to learn things a little more before the news and the mainstream media.
Right.
Um, but I mean, it's advantageous if you have your ear to the ground. Sometimes you might
Oh
miss
yeah,
it. Not,
definitely,
yeah.
definitely. So another energy company that I own is called Suncor Energy. They're a Canadian company. I know a lot of these bigger Canadian companies like Suncor and Algonquin. They trade on the Toronto Stock Exchange, but I'm quite sure they also have tickers on the New York Stock Exchange as well. I would have to like double
That's right.
check that, or someone would have to fact check me on that. But I know a lot of the very large Canadian companies also trade on the New York exchanges. Um, so that's just, I guess, food for thought for the American listeners that are interested in exposure to the Canadian market.
Yep.
And speaking of very large Canadian companies, moving on to one of my next sector being banks slash financial, and I could probably talk all day about how great the Canadian banks are at making money and how the big six, as they're called, are none of them are bad investments. Again, not financial advice, but I think most people would tell you the same thing, that you couldn't really go wrong investing in any of the Canadian banks. You have any thoughts on any banks, Canadian, American, or otherwise?
Yeah, JP Morgan, Chase over here in the US, uh, running through an interesting, struggling moment, right? Jamie Dimon, the CEO, kind of predicting doomsday, as far as well, yeah, that's not. There are a lot of other such people who are making similar commentary. Other than J.P. Morgan, I don't own any other banks here in the U.S. I think that's good enough as far as my uh, sector allocate banks.
Hmm.
But 100% agree with you, Canadian banks, because that's an
Yeah.
area that I've been eyeing. I honestly feel Canadian banks, at least in terms of growth stocks, are far better than their American counterparts. Even in terms of how they've been managing,
Right.
I guess earlier '08 financial crisis, I feel the Canadian banking system is a lot. I do know Bank of Montreal and Toronto. It's just that I haven't quite found the ideal entry point. Maybe now I might. I have them on my watch list because
Yeah.
they have been paying dividends since the 1800s or so.
Yeah.
Right? I mean,
Yes.
what else can you ask for?
Yeah, so you're 100% correct. Obviously, the 2008 financial crisis, Canada was greatly affected primarily because of our proximity to the US, but the Canadian banks weathered the storm much better than their US counterparts. Um, and then also going back to sort of your point about how, well, I guess both of our points about how attractive the Canadian banks are. I think a big part of that is the fact that there's only the 5 or 6 of them, whereas in the US, there's much more competition, beyond obviously JP Morgan is probably one, if not the biggest US bank, but there beyond that, there's a lot more than just 6 5 or 6 other, banks to compete with, right? So
That's right.
that's also a big part of why the Canadian banks are so successful. There's less competition.
That's correct. Because banks are, well, they are regulated in the U.S. as well, but I think that the banking system in general is more government controlled in Canada, to the U.S. I
Right.
don't know. Maybe I'm wrong.
Yeah, well, the big thing there in 2008, you've probably seen the movie The Big Short that really explains it well how, you know, anybody and their dog was able to get a mortgage and which led to obviously that meltdown. Whereas that just wasn't the case in Canada. The Canadian banks were not exposed to weaker mortgage holders.
Mhm.
So that obviously really strengthened their position. And we can move on from banks right into telecoms. Before we do, I should just mention I actually don't own any of the Canadian banks outright, but I do have a position or exposure to several of them through a um, dividend split fund. It owns 15 stocks, and I believe they own 4 or 5 of the banks, as well as Manulife and Sun Life, which are insurance companies. So that one's called DFN. I can't recall who on Twitter turned me on to that one, but it's a pretty good, again, in my opinion, it looks like a pretty decent, dividend split fund because of the companies that they're invested in. And so, like I said,
Interesting.
moving right along into, sorry, did you have something to say there? Were you gonna add a point?
No, I DFN previously, so that's a nice insight there.
Sorry, you said you have held it or you've looked at it?
Heard of DFN previously, so it's nice to have to look it up, I guess.
Yeah, yeah. It's got a very scary high yield. When you look at the yield, you're just like, "Oh my goodness, how can they sustain a 17% yield?" But then when
Oh
you
wow.
look at, okay, they own Royal Bank, Bank of Montreal, CIBC, Toronto Dominion. I think Bank of Montreal might be in there as well. And then, like I said, the insurance companies and and then moving right along into telecoms, they also have Bell Canada and Telus, which are 2 of the 3 big telecom providers in Canada. And this is one where I feel that there's a little bit more of a comparison between Canada and the U.S. In Canada, we have the big 3 being Bell Canada, Telus, and Rogers, whereas in the US you have your big 3 being AT&T, Verizon, and T-Mobile. So any thoughts on the telecoms?
Yeah, I've heard of Telus or from the Canada side. Up until very recently, I owned and I continue to hold Verizon. T recently, it's just because it was bad to begin with.
Sorry, say
I
again?
have to be honest here.
Sorry, I missed what you said there.
I, T was a bad investment to begin with.
Oh,
I got into it kind of like an amateur dividend investor, chasing the yield. In 2020, during that entry point, chasing and not doing my due diligence there, because if I had taken one peek at the management and looked at records as to how they treat shareholders and what they say, I would have sold out of their ordinary AT&T. It's something that they've since split with spinning off their business as far as Warner Media and I think even aging businesses generally. They've sold off Direct TV and now become a pure play telecom.
right.
But I have trust in their management and their CEO. And so I've sold out of that. Verizon is again going through a lot of pains because of the nature of the industry. They've invested heavily in the 5G spectrum and therefore more than AT&T, but quality lot more reliable, in terms of what holders. And so from a dividend safety perspective, although they don't grow as fast, um, I think they are, and so I like the yield. Yeah, I think yielding to 7%. The last time I checked, the stock has been crushed quite a lot in the trading around the 30s, maybe if I'm mid 30s, is safe. And so, I did nibble in a little bit my passive income stream. But yeah, those are the two that I owned until I sold out of T.
Right. Yeah, okay, good stuff. Full disclosure, I've started a small position in Bell Canada, and I just plan to dollar cost average into that over time. I did see tweets this morning that people were receiving dividend payments today from Bell Canada. Mine has not hit my account yet, but I'm sure it will. Um, Possibly it might not show up till Monday at this point being the weekend. I did see a couple people tweet that they had over $1,000 come in this morning from Bell, so that's obviously a really nice little bit of passive income. And moving right along, next on my list is food. Food is one of my favorite sectors because everybody has to eat every day. So there's a lot of great food companies out there. Right now, I'm invested in three of them. One being Rogers Sugar, which I just got a dividend from them a couple days ago. They pay a quarterly dividend. I'm not sure the percentage yield right off the top of my head. I own a company called SRV, which owns chain restaurants, and obviously they're starting to do better again since the pandemic restrictions have been lifted. Obviously, the entire restaurant industry was hit quite hard through those 2 years, but I don't think they missed a single dividend payment through those 2 years, so they're pretty good. And then Pizza, which is a Canadian franchise pizza shop, like they have pizza locations right across the country, and again, that's one I like because people are gonna eat pizza, right? Anything in the food sector that you look at or own or have any thoughts on?
Well, as far as pure play restaurants, I don't own any. The reason is because it's not that you don't have opportunities. We have McDonald's, which very percent dividend hike.
Yep,
You
I saw that
what these
yesterday.
guys are hiking, inflation beating hike from McDonald's, which is another dividend aristocrat, decades along.
Yeah,
Uh, my, my strength, long-term growth prospects. I guess how much more are they going to grow? Are they going to be, let's say, 20 years time? And if yes, how are they? And yes, you can look at McDonald's as a realistic. Um, that's one way of looking at it. But I kind of own it for the sum of its parts, as and whether they can get foot traffic in there.
right.
Um, from McDonald's, Starbucks is yet another popular name that keeps in my research, and there
Yep,
too, right? I'm not exactly sure the brand value with these companies is an intangible that I can't and I can't really decide how to value these companies or whether to determine whether I'm overpaying. And then there's the question of also how much they're going to grow, right? How am I going to drink coffee beyond a certain number?
right.
In a way, and given even in the recession, I don't think stop eating out, as frequently because they kind of light on their pocket, and with inflation being so high, watch where they're spending. So those are kind of
Yep.
other thoughts that have kept me away from the restaurant business.
Definitely part of the equation, right? Like factoring in inflation and recession or whatnot. Like as you say, people are going to become watching their discretionary income much closer and choose to not eat out as often. With that said, I do think McDonald's still has room for growth as we see more of the plant-based burgers and vegan food. And I know McDonald's and most of the other chain restaurants have been experimenting with the plant-based meats and Beyond Meats and those types of products. So I do think there is room for growth there. But I guess to the same point, how much coffee can Starbucks sell? If McDonald's starts selling more plant-based burgers, does that all of a sudden now their Big Mac and Quarter Pounder sales decline? I don't know. I don't know the answer to that. Obviously, don't know the future, but um, yeah, you know, obviously both McDonald's and Starbucks are, as of right now, great companies that both pay a healthy dividend. I think I saw yesterday that McDonald's has had a dividend increase every year since I think it was 1976. So getting
That's
very
right.
close to that 50-year mark.
That's right.
Yeah, that is great. You did see.
They're vying for the dividend kings are companies that have paid a dividend or increasingly for 50 plus years.
Right.
And so it's just amazing if you kind of 50 years, that's a god of a long time,
Yeah.
and
Yeah.
pounding, right?
Well, and if that year over year growth, your company is able to do that, increase their dividend every year for 50 years. Obviously, it's becoming or- well for nearly 50 years now has been a very attractive company and dividend to invest in. Any other
That's right.
thoughts on food?
Well, I don't own any in the restaurant sector, but I join with respect to grocery shopping and in
Yeah, that
general
counts.
because you kind of you have to shop, and recession, you always need groceries.
Yeah.
So I do own, which is a very popular wholesale over here in the U.S. and I think they also have presence in Canada as
Sorry,
well.
Costco?
Yeah, through Costco.
Yeah, Costco, we have Costco's here. Obviously, they're huge. And yeah, obviously
Correct.
we see that on Twitter a lot. People tweeting about their Costco dividends, and so yeah, obviously that's a good one to have. And like you said, a little more recession proof because people still have to buy groceries no matter what.
That's right. And I still do own a grocery chain by the name that's based out of Idaho, and they have presence all across the. I don't know if you caught this in the news. I think yesterday, merger announcement with Kroger, which is, I guess, in terms of their, grocery market share in the U.S. and Albertsons announced the merger agreement are
Oh, I know.
going to be the parent company.
Yeah, I didn't see that. I didn't. So Albertsons is buying Kroger, or they're merging.
Yes, they're merged giant company. Uh, so
Wow.
it's literally the second enters in the grocery grocery industry here in the U.S. into
Right.
one, right, into one ginormous company.
Wow.
Then, as a part of that, is going to be announcing a special amounting to $6.81 per share.
Wow.
So yeah, I'm pretty happy Albertson shareholder because yeah, dividend is not something that I'll complain about.
No, not at all.
But I imagine that the merger is going to see some pressures here in the U.S. because in general the government has been pretty clamping down on such uh, merger acquisitions in general.
Right.
And I imagine that cases where in some cities you will not, let's say a Kroger, as far as grocery shopping. So it might be considered as like an in nature because there's no valid competitor available to. So it's still early days. I'm gonna get through all
Yeah,
that.
because I would think, like, so we don't have Albertsons or Krogers in Canada. I have heard of them, um, but we do have, Walmart here. We don't have Trader Joe's either. But I'm just thinking, like, between Trader Joe's and Walmart and your Whole Foods, there's a lot of grocery competition in the U.S. So I don't know if the regulatory bodies would really see a problem with a merger between Albertsons and Kroger. Again, I don't know. I'm just saying I know that there's a lot of grocery competition. Well, both in Canada and the U.S., there's a lot of grocery store competition from the Walmarts, the Costco's, and like I said, in the U.S., you have the Trader Joe's and Whole Foods and Safeway. In Canada, in Western Canada, we have Safeway as well, and we have
Part of
several other
Albertsons.
grocery chains. Sorry, go ahead.
The Alberts companies actually own the Safeway brand.
Oh, do they? Okay, I didn't know that.
Right. So all of that. So it's a win-win as far as Kroger goes to all of these chains, Safeway being one,
Right.
and so in terms of the overall footprint of number of stores in the country, it's a pretty big win for already having a pretty big market share.
Yeah. Wow.
They still don't cross one close in terms of overall market share.
Any other thoughts on food before we move on to the next sector?
No, I think we covered it pretty well. And restaurants,
Yeah.
consumer staples in general. I because I think it's very defensive and recession or no recession sector to have in one's portfolio as far as
Hmm.
st-
Yeah, definitely. One of my past recent guests also had both Coke and Pepsi in their portfolio. So again, great companies that have been around for 100 years or more. And I just thought I'd just throw that out there. There's so many, like you said, in the consumer staples. There's so many companies that you could look at.
Correct.
And
That's
yeah,
right.
so sorry, I didn't mean to cut you off.
You're fine. You're
Okay,
fine,
yeah,
Dave.
sorry. And so next sector up, I have healthcare. Um, I have a few healthcare stocks. One is called NWH, Northwest Healthcare, and they pay a monthly dividend, which actually that one hit today too in my Saturday morning dividend payout, which is always nice to see those dollars going just appearing in your account. I also own one called Extendicare, and I think I probably have, I have a few marijuana stocks as well, which I guess can sort of loosely fall into the healthcare category. Um, Neither one of the marijuana stocks are dividend pay. Actually, the one that did just reinstate their dividend, so they hadn't paid a dividend in a year, and then 3 months ago it showed up, and then it showed up again yesterday, so or the day before. So that was a nice surprise. Um, Anything in healthcare that in that sector that interests you or that you own?
Um, Other than consumer staples, I'm pretty bullish, at least going into the next couple of decades, medical attention and medical care to some extent. So you know, innovate one way or the other. Coming out of the
Yeah,
pandemic,
we're
that's
definitely looking at the baby boomers and the aging population, and even now us Gen Xers
correct.
are getting old. So yeah, healthcare I think is an important sector in the next decade or 2 decades. Like I would agree with you there.
Correct. And as far as companies that I own in this sector, I own Johnson and Johnson, which is of the dividend investing community. It's one of my core stocks, if you
Yeah,
will, sleeper at night stocks. Uh,
yeah,
and then other than that, I own, which is, um, I think from Abbott Laboratories, which is yet no Democrat. Uh,
okay,
AbbVie, um, they have their uh, main drug. I don't remember which one at the top of my head, but uh, which um, which expiry now. So it's they going to be looking at some other drugs in, um, as far as innovation and for the next few years. Um, Two guys, uh, very good dividend payers, very consistent in terms of um, AbbVie is little more on the um, being very aggressive on and the dividend CAGR. Uh, Johnson and Johnson is pretty company, so slightly slower on the growth side, but still nonetheless, in most portfolios.
yes, definitely would agree with you on Johnson and Johnson being a sleep well at night investment. Another company that's been around for I'm not sure how long, but I'm guessing 100 years or more. And yeah, I don't think you're going to go wrong uh, owning shares in Johnson and J&J. Anything else in the healthcare sector that you would like to talk about or mention?
Yet another investment, but this is kind of a great. It's a healthcare insurance company, health group, um, is one of the major medical here in the U.S. and
Right.
um, it's kind of a you have a love and hate relationship because medical insurance cheap, and the medical system over here essentially. But there again, as an investor, if you look at this as an investing opportunity, there's attractive returns
Right.
from this industry as well, given its broke. UNH has been a fantastic dividend growth stock. It's trading at all-time highs right now. They had a solid Q3 earnings beat just recently. One of my growth names in my portfolio, if you will.
Yep. That sounds very interesting. Uh, it obviously falls into the healthcare sector, but it also sounds like as an insurance company, it also falls a little bit into the financial sector as well. And obviously, healthcare in Canada is 100% different than the U.S. Like we just don't really have. There are some health insurance companies, but not really. Like when I go, if I have to go to the hospital, I just take out my government issued health ID card, and that's how that's how it's tracked, right? All of with universal health care, it's just paid through taxes, basically, right?
And yeah, I've heard this from other friends and relatives as well. Wish we had a healthcare system kind of like Canada's, but everything, I guess.
Yeah, well, honestly, it's not just Canada, like Australia, New Zealand, UK, Sweden, Norway, the majority, probably France, Germany, the majority of your first world countries have universal health care, and all of these countries that I just mentioned look at the US and go, "Why don't you guys have this too?" Right?
It's just blame our politicians, I guess. I
Yeah,
don't
yeah,
know.
yeah.
I don't know.
Well, I'm sure that's a big part of it. I'm sure there's probably, you know, not saying there's corruption in politics, but there's probably some corruption in politics where the insurance companies and lobby groups, and I mean, we both know how that works, right?
Absolutely, absolutely,
And it's not just the US
100%.
government that's corrupt, they're all corrupt, right? So,
Yeah, yeah, yeah.
um, last sector on my list is technology. Anything in technology that you own or have on your watch list or of any interest?
Well, obviously, given that I work in the technology sector,
Right.
bread
Yes.
and butter, if you will, um, as far as currently, um, I am bullish on, which is again another darling dividend growth community here, Texas Instruments,
Right.
and other than that, I own Apple, and I also own Visa. As maybe finance stock as well, but with a technology company because they look at credit cards and associated with fintech in general.
Hmm.
Uh, four stocks, uh, and I'm bullish on each and every one of them. We have right now where tech stocks have been beaten up
Yeah.
left and right, and
I have
so
seen
I've been pretty
Texas
heavily.
Instruments. Sorry, go ahead.
No. What I was saying was that this has been a pretty good to go buy pretty heavily into them up.
Yes, I was just going to say about Texas Instruments. Again, going back to dividend Twitter, you see a lot of tweets about it, and I would reckon that not a single person at some point in their life has owned. We've all owned at least one Texas Instruments calculator. They've just, you know, I don't even know if they still. I'm sure they do still make calculators, but I know at one point in their history that was one of their big items products, and it seemed like when I was a kid or in high school, just everyone had a Texas Instruments calculator.
That's
So
correct.
definitely a
I mean,
recognizable company.
yeah,
Go ahead.
yeah, and correct as far as the calculators. Every all of us at some point in our lives. They, but interestingly, are probably the most relevant portion of their. In fact, they classify it under, some category like others or something like that.
Right.
It's a very small portion of their overall revenue. Pretty big into analog and digital semi. And if you look at all the tech that are going to be foreseeing a couple of decades, I'm pretty sure that have some or the other contribution as far as chipsets from Texas. They
Right.
are going to be involved in all of the form.
Yes. Yeah, and obviously that's a huge market, the semiconductor market and microchips and all of that. As I'm sure, well, as you're obviously aware. And anything else in any other sector that we haven't touched on? Anything else you want to mention or talk about?
Well, a couple of other sectors. Well, not sectors as such. I know ETFs and dividend growth ETFs are as an investment vehicle with a lot of investors in our community. I do own individual stocks, but in some others that are tied to my retirement, given the of how to keep track of these individual stocks and multiple accounts. In
Right.
those accounts, I try and dividend growth ETFs, and so there are a couple that I own. Is a pretty popular name here in the U.S. called ACS. It's Schwab's
Right.
U.S. dividend growth, um, and it's pretty nice in terms of performance and the starting dividend yield, and the dividends and the companies that are contained um, in the ETF. So that's one, and I own a second one called DGRO. Is from iShares. iShares dividend growth ETF have been pretty good as far as overall performance. I've been pretty happy with both. So out there, because you don't always have to own into very well with ETFs as well. That's obviously an option. That's perfectly reasonable too.
Yes, I would agree. ETFs and index funds are great vehicles, especially for people just entering the market that may not know what to research or how to research. And there's a lot of ETFs and index funds that I don't want to say are no brainers because I feel like nothing in the stock market is a no brainer, but the ETFs and the index funds are probably as close as you can get to a no brainer investment. And okay, with that said, uh, thank you everyone so much for either watching on YouTube or listening on audio. Please be sure to subscribe. As I said in the beginning, I have some incredible upcoming guests that you will not want to miss. So definitely subscribe with your notifications turned on. And thank you so much to my guest today, Life with Dividends.
Real fun. It was a pleasure chatting with you, and stay connected on Twitter, and keep sharing updates, because
Yes,
I
definitely.
to learn more about the Canadian side of things, and as
Yep.
far as so yeah, this was fun. Thank you so much for having me here.
Again, thank you. Thank you for spending the time with me. Thank you for being here, and we'll have to do it again sometime.
Yep.
Okay. Sounds good.